senior people didn't leave the firm. And our actual people turnover declined, and our clients, with very few exceptions.
Goldman Sachs, one of the most powerful names in global finance. But what makes this institution so influential that some say it rules the financial world? Today, we'll explore how Goldman Sachs rose to dominance and why it's often at the center of global financial events. Are you ready to find out? Let's start by asking a basic but crucial question. What exactly is Goldman Sachs? You probably heard the name tossed around on the news, especially during financial crisis. But what does it actually do? Well, at its core, Goldman Sachs is an investment bank. It offers a range of services like investment banking, asset management, and securities trading. Basically, it helps businesses raise money, manages huge sums of wealth, and trades everything from stocks to complex financial products. But here is what makes Goldman Sachs so special. It's not just any investment bank. The firm has a unique knack for being at the center of some of the biggest financial deals in the world. We're talking about mergers between massive corporations, initial public offerings that turn companies into giants, and huge investment funds that manage billions of dollars. Really? Yes. Goldman Sachs plays a role in making or breaking companies, and by extension, entire economies. Their financial reach extends far beyond Wall Street, influencing global markets in ways that most people don't even realize. Whether a company needs funding for an expansion or a country needs advice on handling debt, Goldman Sachs is often involved behind the scenes, pulling the strings that affect the global economy. Now, you might be wondering, why does Goldman Sachs seem to have its hand in everything? Why do we constantly hear about it when something big happens in the financial world? The answer lies in the firm's unique ability to manage risk better than almost anyone else. They've built a culture that revolves around discipline, ambition, and quite frankly, being ruthless when they need to be. They don't just survive financial downturns, they often come out on top, stronger and richer. Goldman Sachs has been called the best risk manager on Wall Street, and this reputation has helped it maintain its dominance even in the most volatile financial environments. Let's go back to the 2008 financial crisis, one of the worst economic disasters in modern history. While other banks crumbled, Goldman Sachs not only survived but managed to thrive. How? Well, here's the kicker. Goldman Sachs did take positions against the mortgage market, but it wasn't as clear-cut as consistently betting against their clients. They saw the housing market bubble as a ticking time bomb and positioned themselves to profit from its collapse. They essentially hedged their risks by making strategic bets, a move that earned them billions. While this strategy was controversial and led to a lot of criticism, it showcased Goldman Sachs' uncanny ability to turn even the worst situations into opportunities for profit. And not only did they profit, they emerged from the crisis as a key player, while other institutions struggled to stay afloat. To understand how Goldman Sachs got here, we need to go back to its roots. The story starts in 1869, when Marcus Goldman, a Jewish immigrant from Germany, founded a modest finance firm. At the time, the US financial system was still developing, and Goldman saw an opportunity to help small businesses by turning their debts into liquid cash. This was the birth of what we now call commercial paper, a short-term debt instrument still used today. Although Goldman did not create commercial paper, he was a pioneer in popularizing its use in the US. By creating a market where small merchants could convert their receivables into immediate cash, Goldman innovated in a way that laid the groundwork for modern finance. But Goldman wasn't satisfied with just being a small player in finance. As the business grew, he brought his son-in-law Samuel Sachs into the company, and together they expanded into bigger, more lucrative markets. Fast forward a few decades, and Goldman Sachs was not just a family-run business, it had become a financial powerhouse. The firm began moving away from commercial paper and started focusing on underwriting, helping companies raise money by issuing shares or bonds. This marked a pivotal shift, as underwriting would become one of the core activities that propelled Goldman Sachs into the upper echelons of Wall Street. By the early 1900s, the firm had started helping companies go public through IPOs, a hugely profitable business. One of their biggest early wins, taking Sears, Roebuck & Co. public in 1906, in what was then a groundbreaking deal. From there, the company just kept growing, finding new ways to dominate the investment banking world. The Sears IPO solidified Goldman Sachs' reputation as a major player in finance, allowing it to compete with bigger, more established firms. This move would also position Goldman Sachs to take part in some of the most important financial deals of 20th century, but it wasn't always smooth sailing. In 1929, the stock market crash brought many banks to their knees, and Goldman Sachs wasn't spared. They lost millions and faced a massive reputational hit. However, in true Goldman fashion, they bounced back, largely thanks to one man, Sidney Weinberg. He had started as a clerk at Goldman Sachs, but worked his way up to senior partner, eventually steering the firm through the Great Depression and rebuilding its reputation. His leadership was instrumental in keeping Goldman Sachs afloat during a time when many other banks failed. By the 1950s, Weinberg had transformed Goldman into a firm trusted by some of the largest corporations in America. If you heard of the phrase revolving door, you'll know that it perfectly describes Goldman Sachs' relationship with the political world. But when did this start? Well, it's hard to pinpoint exactly, but by the mid-20th century, Goldman Sachs had already begun embedding itself in the US government, and by the 1980s, it was a well-established trend. Many of the firm's top executives would go on to hold a key government position, and this continues today. This tight relationship between Goldman Sachs and the government has been both a blessing and a curse for the firm. On one hand, it provides invaluable access and influence. On the other, it has led to accusations that Goldman Sachs has too much control over government policy, which critics argue is detrimental to democracy. One notable example is Henry Paulson, who was CEO of Goldman Sachs before becoming the US Treasury Secretary during the 2008 financial crisis. He was one of the many Goldman alumni to make the jump into politics. Another is Robert Rubin, who also served as Treasury Secretary after a successful career at Goldman Sachs. This revolving door between Wall Street and Washington has drawn significant criticism, with many accusing Goldman Sachs of wielding too much influence over government policy. Is this a conspiracy theory? Not exactly. It's more of an open secret, one that has earned the firm both admiration and disdain. Goldman Sachs is based in New York City, but its influence extends far beyond Wall Street. The firm operates in nearly every corner of the globe, with significant operations in Europe, Asia, and the Middle East. But its global impact hasn't always been positive. One of the most controversial moments in Goldman Sachs' history was its role in the Greek debt crisis. In the early 2000s, Goldman Sachs helped Greece manage its debt through cross-currency swaps, legal at the time under EU rules. But these transactions had the long-term effect of masking the true size of Greece's debt. When the truth eventually came out, it triggered a financial meltdown that affected not only Greece, but the entire Eurozone. This episode is often cited as an example of how Goldman Sachs' expertise in financial engineering can sometimes have catastrophic consequences when used irresponsibly. Goldman Sachs has also been involved in high-frequency trading, a practice where algorithms execute large volumes of trades in fractions of a second. However, it's important to note that while Goldman Sachs participates in algorithmic and electronic trading, high-frequency trading as a controversial practice has been more closely associated with other firms such as Virtue Financial and Citadel Securities. Goldman Sachs' involvement in HFT has not been as central to the public controversies surrounding this practice. It also has raised concerns about market manipulation and fairness, further fueling criticism of the firm. Despite these controversies, one thing is clear: Goldman Sachs is a firm that knows how to adapt, whether it's surviving the Great Depression, profiting from the 2008 financial crisis, or embracing new technologies like high-frequency trading. Goldman Sachs has remained at the forefront of global finances for over 150 years, and given their track record, it's likely they'll continue to play a leading role in shaping the financial world for years to come. The firm's global reach also extends to emerging markets, where they've been involved in everything from corporate takeovers to government bailouts. Whether it's facilitating billion-dollar deals in Hong Kong or helping countries rebuild their economies after financial downturns, Goldman Sachs has a hand in all. But wherever they go, controversy tends to follow. In fact, the firm has been often criticized for its aggressive tactics in these markets, with some accusing Goldman Sachs of exploiting vulnerabilities for profit. As we mentioned earlier, Henry Paulson and Robert Rubin are just two of the many Goldman Sachs alumni who have gone on to hold powerful government positions. But there are other names that are worth mentioning. One of the most famous CEOs in recent history is Lloyd Blankfein, who led the firm through the 2008 financial crisis. His tenure at the top of Goldman Sachs was marked by huge profits, but also by intense public scrutiny. Blankfein's handling of the crisis solidified his reputation as a brilliant but controversial leader, especially as the firm was accused of profiting from the housing market collapse. And then there is David Solomon, the current CEO. While Solomon may not have the same high profile as some of his predecessors, he's led Goldman Sachs into new ventures, including consumer banking, an area where the firm historically had little presence. Oh, and fun fact, Solomon is also a DJ in his spare time, performing under the stage name DJ D Soul. Talk about a work-life balance. Solomon's leadership was marks a new era of Goldman Sachs, one where the firm is not just focusing on its traditional strengths, but is also expanding into new markets and embracing technology in ways that previous generations could never have imagined. But no story of Goldman Sachs would be complete without touching on its more controversial aspects. The firm has been accused of manipulating markets, profiting from crises, and contributing to some of the biggest financial disasters of the past century. One of the most damning criticisms came after the 2008 crisis, when Rolling Stone magazine famously referred to Goldman Sachs as a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money. Ouch. Whether it's the 2008 mortgage-backed securities debacle, the Greek debt crisis, or the role in high-frequency trading, Goldman Sachs has often found itself on the wrong side of public opinion. Is it fair? Well, that depends on who you ask. Some see the firm as a necessary evil, a company that's just doing what it takes to stay ahead in the industry. Others see it as a symbol of unchecked corporate power. Ultimately, Goldman Sachs remains one of the most fascinating and polarizing companies in the world of finance. Its story is one of ambition, resilience, and a relentless strive for success, no matter the cost. Thanks for watching, and if you're as intrigued by the world of finance as we are, hit that subscribe button and let's keep exploring these fascinating topics together.